As we get set up for the next panel, I want to let everyone know that there is currently a pitch stage going on in the exhibition area. A lot of the startups here at BlockShow are presenting their projects for the first time ever in public. So be sure to check out their latest innovations in blockchain and crypto. I also want to give a quick reminder to make sure you're using and following hashtag BlockShow Asia 2019 so that you can stay up to date on everything going on in the next couple days. Also, please make sure to check out all of the awesome sponsors, exhibitors, and wide range of startups who are sharing their work out in the exhibition area. Our next topic is again brought to you by Bybit. This is unlocking yield in cryptocurrency assets, encouraging institutions to enter the industry. Digital assets have been experiencing large levels of institutional growth, especially as seen with the arrival of Bitcoin futures. Despite this interest, the industry is still small compared to traditional finance. Here, we are going to discuss the pace at which institutions are entering into the industry, what's being done, and who in the industry really benefits from their entry. Before we go to the panel, just a reminder that if you have any questions for anyone on the panel, please use www.slido.com. Enter the code BlockShow 2019, select stage 1, scan the QR code on the screen with your phone, and just write down your question. The moderator for this panel is Nicholas Merten, and the panelists are Justin CHOW, SHARAN NAIR, JASPER Lee, and Ben ZHOU. Please give a warm welcome.
Thank you all for making it out. I think we've got a really good panel today. I've actually had the privilege of getting to meet many of the people we have up here. Some of them are longtime friends in the crypto space. And we're going to be tackling, I think, a very interesting topic when it comes to cryptocurrencies, which is asking a very serious question, especially something that I think a lot of people are interested in to see this space grow from the $250 billion market we're at now to a multi-trillion-dollar emerging asset class. And that is, how are we going to get institutions involved in cryptocurrencies? And what is the future going to look like over the next few years? So I want to start off with a pretty generic question, but I think it's an important one to get some perspective from all of your different backgrounds. How are we going to see continued growth, not only in general adoption of cryptocurrencies, but for institutions? Justin, you want to take it off?
Yeah, so I think one of the interesting things when we get to speak to some of the institutional players is, the good news is that they've been looking at the space for a number of years now, and so it's not like, they're the first time reading the Bitcoin white paper or trying to understand what's happening. A lot of the big long-term asset managers and institutions that we've spoken to tell us that they've been looking at the space for a couple of years, but most of them, I think, that want to invest have probably already done so. And there's a bit of a gap where the rest of them are sort of waiting for a few triggers before they feel more comfortable investing their clients' money. And when I speak to them, I ask them, what are these catalysts that you're looking for, or these events? It's very frequently, they very frequently say that they need proper regulation before they can invest their clients' money. They need more custody solutions. And even though we have some great providers in the space today, they want more of the institutional custody solutions, like a State Street Trust or a Bank of New York Mellon or a Nomura. And then the third thing would be they need more liquidity, which I find interesting because the markets have become much more liquid over the last couple of years. But you're talking about guys that when they move, they need to put billions of dollars to work. So it's very difficult for them to look at this space right now and say it'll move the needle for their business model. So those are kind of the three things that at least I consistently hear from institutions.
I can agree with you on that, Justin. I think when you're talking about pension funds and some of the larger multi-trillion-dollar asset class pools now stepping into a market that's still sitting at $250 billion. I mean, you've seen it in OTC, the kind of large volumes there are. It's going to be very imperative to have that liquidity, and not to mention, as you said, the insurance policies over this custody. Yeah. So, Ben, you want to add something to it?
Yeah, by the way, my name is Ben. I run an exchange called Bybit. We're a crypto derivative exchange, mainly focused on retail clients, but we do get some institutions come in. And it's very strange that it's very interesting. that we don't KYC our clients, but the institutions, normally the big ones, they want to be KYC'd, so they require us to KYC them, number one. And they do a so-called KYE as well. So they give me a huge long list of questions, including what is my mother's maiden name and all that. But yeah, all the questions, how we run our storage, how do we make sure that their fund or their orders has been hit with another guy or counterparty that is not being washed, or the money of that. So they want all that detail. So we actually spend a lot of energy with our compliance department to make sure that we can provide that service. And second of all, what they're interested in is the API front, is the tech front. So they want to make sure that we have the good API, either by fix and all that, to make sure that they can actually plug it in and work with Bybit. So these are some things we observed from an exchange perspective.
Yeah, I guess it's kind of integrating into traditional systems as well, and kind of making it another market that these institutions can be comfortable with in traditional, trading systems, as you have a background in Forex.
Yeah.
Jasper?
Actually, I also come from the same background, FX industry, and we deal with a lot of retail and institutional clients in the past, right? And at the same time, right now, like eToro is dealing with a lot of retail clients as well, and we gradually, starting this eToro X brand, which is more targeted to those institutional clients. Why? Because we've been seeing increasing demand coming from the institutional player, and two things that they are very concerned about or they will look into is definitely one is regulation, second is the infrastructure. Why? For example, I talked to a friend from Hong Kong. He's running a hedge fund that they are actually right now allowed to allocate 10% of their fund to invest in cryptocurrency. But there are certain requirements that because they are licensed the fund as well, so they have to set up account only with the regulated exchange, right? So this is one concern definitely coming from the institutional player that under the regulations and the framework, they have to work with an exchange that is regulated, right? Otherwise, they cannot do the business, even though they very much want to do it. Second thing is definitely the infrastructure. I think Justin mentioned a little bit about the liquidity. To an institutional level of players, they always concerned about not just the opportunity, but also the risk, right? So the counterparty risk can be a problem. Like we're still seeing like exchange being hacked. We still see a lot of exchange that they are overloaded, like the trade doesn't able to go through, or sometimes the API infrastructure is very shit, right? So they cannot really apply their own trading system. So I would say we definitely see the demand coming from the institutional side, but these two things is definitely essential to get them, to onboard them to this trading industry.
Absolutely, man. I think the quality of matching engines on some of these exchanges, especially with what kind of trading volume we're expecting to come in the next cycle, completely unprepared right now, right? I think it's a huge thing. And not to mention, you said the counterparty risk. You still have things like slippage if you're operating in low liquidity markets. So absolutely agree. One thing is again?
Right. Just continuing with what Justin was mentioning, I think better regulations, better tools, liquidity, and better insight into how the market works is something that a lot of institutional investors will be looking at. One thing that I know of some people working in the institutional investment sector has been that they have a huge learning curve to cover, right? And that has been a bottleneck for a lot of traditional institutional investors trying to get into the space. So I think eventually it will happen, but when that happens, it's going to happen like all of a sudden and really fast.
Absolutely.
Actually, Nick, I just wanted to add one thing as well. It's actually kind of interesting because if you think about how the crypto industry emerged, a lot of it was because of the frustrations with the banking system or a libertarian mindset. And today we're sitting here talking about how do we get long-term capital and institutional money into the space. And the answer really is you kind of need parts of the traditional banking system to be involved. If you are a FDI, it's kind of funny, right? If you're an FDI-insured, regulated, custodian bank, the trillions of dollars that you custody on behalf of the long-term institutional money that we're trying to get into the space will feel much more comfortable investing and having you guys, those banks, take care of their assets. And so we're at a very interesting time right now in the industry. It's almost like a change in the paradigm shift, where parts of crypto will continue to be decentralized, and other parts of it may actually become centralized and follow in the footsteps of the current financial system. And then from there, hopefully the overall industry grows, and both of the two systems can coincide and work together.
Yeah, I mean, just to build on something that we've talked about in the past, Justin, back when we were in Thailand, was that in your market working in OTC, you know that institutions are always going to want to have a third party, in this case, to settle the transaction, someone to get on the line with, rather than keeping it purely peer-to-peer. Yeah. I think it's going to be a very long way out until we get comfortable with seeing that. And having those, again, centralized and traditional elements that we have in traditional markets as well. So I want to go to another question, right? We've obviously talked about there's a lot of rooms to improve technologically, getting an actual understanding of a regulatory framework. But on the latter of these two topics, it's a matter of seeing what governments are pushing the envelope here, what governments are actually pushing forward. Now, I know we're in Singapore. We don't have to be biased towards Singapore here, but if you guys believe it is Singapore, what's the best country that you believe right now is pushing the envelope to adopt cryptocurrencies, or at least build some consistent framework so that companies know how to operate in this market?
I'll go first then. So we definitely see increasing regulations coming from different countries to come in to provide clarification on the regulations requirement. For example, Hong Kong recently announced the sandbox that you can actually operate crypto asset in fund, and also you can be licensed as exchange. But like, which country is better, or which one is more convenient for exchange? It really depends on what kind of business you're running, right? For example, if you are more focused on the retail, you don't want to run into some regulations that are very focused on institutional, for example, Hong Kong, right? So one of the requirements of the sandbox is you can only deal with institutional clients, for example. Some of the very robust regulations in crypto, for example, in Japan, they also provide a lot of limitation, for example, which kind of tokens that you can list on the exchange, for example. So if your business is pretty much very on the retail side, you probably want to pick those islands license that are providing not so concrete requirement. They can also accept retail clients as well. So I would say like we just need to keep an eye on all the regulations, but at the same time pick the one that really fit in your business.
Yeah, so it's really kind of a difficult question depending on what you're trying to build in that case. Absolutely. Any more comments, guys?
I mean, from a exchange perspective, we are focusing mainly on retail clients. We are registered in BVI and are headquartered in Singapore. One of the reasons we pick Singapore as a headquarters is because it's obviously the hub of central crypto, all these conferences. And number two is the government seems to be quite welcoming about crypto and blockchain in general. But the honest truth is there simply isn't a specific regulation designed for a derivative exchange like Bybit. So right now we're not regulated. And but with my previous experience, my old FX business, we're regulated in I think 16 countries. So right now we cannot take any US clients. I would love to see a concrete, at least a framework of how to get the proper license in the US so we can actually enter the market. So we know it's a huge market, but we cannot touch it, just simply because there isn't any regulation on it.
I'll take the blame for that. One of the many U.S. citizens who really want to see more of a push for regulation. We are definitely going to be one of the last ones, I think, to the pod.
Just to add on, so I come from a country where people want to get rich quickly, and that's true for pretty much every country, but we are 1.2 billion people, so that's a lot of us. I'm talking about India. So when crypto came around, I think a lot of people got introduced to cryptos through scams. That's a sad part, but I sort of understand why regulators are slow in developing countries like India, because one, the quality of investors are really low. The financial literacy is extremely low. And I think unless this is not taken care of, regulators are having a hard time. Like I've been in the crypto space for about 5 years now, right? And I could tell you one thing, even if I have to sit down with a bunch of people and build a framework, it's going to be impossible. Think about regulators who have no idea of how crypto works, and then the kind of pressure we build up and saying, hey, let's get this regulated. I think the way regulation should work is that we work on a sandbox environment and try to deploy whatever works in the best interest of the people. And I think that's the only way this should move forward.
Any more?
Yeah. Yeah, I mean, I think definitely there are certain jurisdictions in the world that are more progressive. We see Japan as being sort of the leader there with the virtual currency exchange licenses that they've given out. I think it's almost like a couple of dozen now. And these are financially regulated institutions now that have to report to the government and apply a framework to how they run their business, mimicked off of the FX industry, for example. I think we're going to start seeing more of that. Recently, China has made some interesting commentary, more on the blockchain side than the crypto side. I want to highlight that distinction. I think it's very important. But there's been more vocal commentary from them as well. And then I think, quite frankly, the U.S., while slower, recent events such as the announcement of Libra, for example, I think have given the U.S. regulators a heightened sense of urgency, and it's really nice to start seeing them pay closer attention to the industry. And I think we're going to be in for some for interesting announcements in the next couple of years as we see the space start to grow and more folks realize that they want to make the space actually work. So naturally, I think it's almost like a push and pull mechanism that some jurisdictions are more progressive, and then it causes others to have a bit of FOMO, and then they play catch up, and you kind of need everybody to play the part to help the space grow, and it just takes time. And I wouldn't be surprised if we have to go through another couple of years before things really start to mature.
Speaking on that topic, Justin, of waiting a few more years, another question that I think a lot of people have, and we talked about it back in Thailand, was this question of a Bitcoin ETF. I think it's been obviously a catalyst that many people are looking towards. I mean, if we talk about pension fund markets, it's about $42 trillion. 1% exposure in those markets would bring about $420 billion of buy-side liquidity to crypto, far surpassing what we saw back in 2017. I'm curious to get your guys' take from all the different perspectives that you have. Is it possible to see this in 2020, between 2020 and 2021? I think that's kind of a time frame many people have for the next cycle. Do you believe that that could possibly come through in that time frame?
Well, ETF and passive investing in general has been a massive theme over the last 10, 15 years. So, it definitely makes sense that whether you're a Vanguard or one of these large ETF providers, that you're probably looking at the space. And I think from an investor standpoint, there are definitely a plethora of investors out there that want exposure to crypto, but they struggle, and I think CZ said it earlier, they struggle with the idea of having to custody their own coins. Again, the irony of our space, but not everybody wants to control their own private key. So at the end of the day, an ETF does kind of solve that. It's synthetic exposure. I think we need to take a step back, and whether or not we think an ETF should exist, we need to think about whether or not the infrastructure is there to provide a quality exposure for the clients who want to purchase through the ETF. And so where are they going to get their liquidity? Is it going to be through a regulated future? Well, regulated futures right now have a cap on how much exposure somebody can have through one of the FCMs. That's a bit of a problem. Where are they going to custody the asset? Is it federally insured or not? I think we need to see some of the background infrastructure problems being solved first before we speculate that a regulator is comfortable saying that they're happy to have everyday layman be able to have exposure through an ETF.
I personally very positive on this. At least I want to be optimistic on this because this will push things forward, right? But I do agree with Justin what he just saying, about the infrastructure. The why SEC is keep pushing back on this is because the lack of liquidity, custodian, all this infrastructure that are not ready. But in a way, on another one, that the industry people are doing something very similar already. Like for example, in eToro, you can now buy a copy portfolio that involve different major tokens already, right? So through this kind of development from different exchange, different players in this industry, to a point the infrastructure will follow, and to a point the regulations will be happy to see this happening. So I would love to be positive on this side, yeah. Mm-hmm.
So yeah, I agree. I think even with the ETF we're talking about, mostly the traditional one, it will be focused on the traditional market, bringing actual old money into the whole atmosphere. But we do see some exchange, new exchange offering different bundles of products, but the volume has been quite low on those products. So if you use those products providing for crypto people, they don't like it, or they don't trade as much as Bitcoin. But if you present it to traditional, then you have all these hurdles, all these traditional issues you face with. So I think it will still take some time, and I think if you're going to present the product to retail now, it has to be accessible to everyone and get rid of the regulations and all that. So that's what I believe. Yeah.
I'm very positive about the ETF side. Maybe not so early, but
Yeah.
Although I'm positive, the regulators thinks otherwise. At least back based on the 9 ETFs that have been thrown out. But that also brings us to a place where a lot of people are building new stuff, building better ways of convincing the government to look at, hey, this is going to work. And I think real soon we're going to see an ETF come by.
Mm-hmm. Yeah, I think it's going to be very interesting and stuff. If we do see a future, like you're mentioning, Justin, where we end up going back more towards kind of against the arguments of crypto and deciding that we're going to trust centralized solutions to be able to store these crypto and traditional financial products, or if we will be able to see some kind of revolution in self-management of keys, where we're not in this world where we have a 12-word seed phrase that you got to write down on a piece of paper that could get lost, get wet, burned, and if your house burns down. There's so many concerns and vectors right now that need to be solved. I would love to see a future, and I have a part of my future bet on the idea that we're going to see a world of crypto where people can become their own custodian. I mean, I really do stay hopeful in that because it's the core message of crypto. It doesn't make Bitcoin as valuable if it's just a speculative asset that we all have in one single, cold wallet under one financial product, in my opinion. But, it's interesting. I think we're going to have to see different perspectives. But in the sense of, talking about institutions in crypto, I think that, especially on my channel and stuff, I'm always talking to a lot of individuals and I meet people at these conferences who are really great people, but I'm curious sometimes if maybe even individuals like myself or the community have a misconception on institutions or regulators in regards to crypto. From the experiences you guys have had, do you see any of those misconceptions materialized and find yourself surprised when, people had these certain stereotypes about how institutions are approaching crypto, but in reality it's actually different?
Well, I think first and foremost, when we think of institutional adoption of crypto or investing in the space, it really comes down to where an institution is on the risk curve and the risk spectrum. So if you think about like pension funds, sovereign wealth funds, they are like the least risky players in the ecosystem. And then perhaps some of the most aggressive are venture capitalists. It's also possible that all these types of players can exist within one organization. And so I think that's an area that, for example, when it was public that the Yale endowment made an investment in the crypto sphere, I thought, wow, that's really impressive, super progressive. Then I found out I think it was their venture capital arm, which made more sense to me. So I think, in the paradigm of the world today with low interest rates and whatnot, there's more riskier money out there. There's money that is looking for greater investments, greater yield, and that's the type of capital that is willing to take the chance in a space like crypto. Family office money, proprietary trading firms, et cetera. And then a large subset is still the longer-term sticky capital that is harder to move into the space. And so when I think about like the type of institutions that are investing, initially I thought about them by categorizing them: pension funds, endowments, sovereign wealth, hedge funds, venture capital. And now I think of it more as like the type of money within the institution and where are we. And what I'd like to see is I'd like to see non-venture capital money within these institutions starting to invest. Mm-hmm. It's still the very, very risky part of the teams. They're the ones that are investing. And I'd like to see moving outside of that. That would tell me that, okay, now the floodgates could be opening a little bit. So that's kind of what I'm looking for.
I completely agree with you on that, Justin. We did kind of technically see institutions in the previous cycle with the ICO boom. I saw a lot of different venture capital funds going into the ICO space and shortly after leaving. But the interesting thing about it is I think in this next cycle, we have so many interesting macro factors, and I think we've talked about it before, the net $17 trillion in negative yielding bonds in the market, where you're not earning any yield, you're actually losing money. So in this case, if you could provide a non-yielding asset like Bitcoin and provide 1-2% exposure in some of these sovereign funds, family funds, it starts to really add some leverage for the space in the long term, I think. You guys have anything to add to that?
I think one very interesting misconception in the market is they always put institutional players and the retail players in the opposite side. They always think that institutional players are making money from the retail, which is partially true. But at the same time, especially in the trading market, you do need the institutional player to participate in order to make the whole environment more efficient, right? So without the institutional players come in, you don't get the liquidity, basically, right? If all the liquidity are based on the retail traders, you don't see the price efficiency in all the trading environment. So we don't necessarily need to put them on the opposite side, right? So all add up together will create a more efficient market for people, everyone to trade. So I think this is can be a very interesting misconception everyone is thinking about.
On the other hand, we see so many institutions. So we get applications that claiming they're doing 3% of BitMax, 5% of Binance. If I add all of them together, we will be, I don't know, 5 times the current volume today. So
and it's 20 years.
yeah, every
old
day
kid, right?
they come to me and they say, hey, we are this institution. We are doing so big in traditional markets. We want to connect to Bybit and then trade. So we get a lot of that. I think is one thing that in crypto, they need a way to sort of claim they're big and they have a lot of volume and they actually want to be taken care of from us. So they claim they're an institution, even though they're actually just maybe a two-man shop doing a regular trading and simple retail. Yeah, this is what we've seen so far. It's interesting. Yeah.
I think most retail investors think that institutional investors are like a different creature. They come with a magical wand, and then they're going to tap it, and then the whole prices go up. But just like how Justin said, that institutional investors comprise of 2 types of people. One with a heavy risk appetite, like the hedge fund managers. On the other end, you have pension funds. And if you look at pension funds specifically, or endowment funds, then there is some sort of convincing that needs to be done for the retail input that they take, right? So it has to be in synchronous with how the retail movement moves. So I think that's one of the biggest misconceptions that people have, that like everyone is going to make ton loads of money by the time institutions walk in.
Absolutely, man. I think on the point you're bringing up about the different risk appetites, that can be really deciphered in these different sectors of finance through the different regulatory structures. Hedge funds have extensive flexibility. Investment bankers, people who are managing pension funds, much different, not only risk appetite, but actually framework for what you can invest in. So, I mean, that's where we've already seen some capital come through hedge funds, these kind of offshore parts of the world when it comes to finance, but we haven't seen it at home in some of the major I think, big opportunities for money to swarm into crypto. So the last thing I want to ask you guys real quick is see if we can get a short answer, so maybe we can jump into some questions from the audience. Is, we've talked about the different perspectives of the financial sector and institutions when it comes to crypto. Do you believe it's imperative for institutions to embrace crypto over the next few years for it to truly succeed? I think as we've been kind of hinting towards, it seems like this is a space that, as it's continued to evolve, it's continued to challenge the narrative that we don't need institutions or we don't need the traditional sector to so much opt into it for it to expand. What's your guys' take on that, whether it be positive or negative in that case?
I personally think that irrespective of whether institutions come in or not, crypto industry would go up, right? Because it does never about investments. It's more about utility. It's always about the technology behind it, trying to solve problems for people. And are we trying to say that if institutions don't come, then all of that stops? Then definitely not. That's definitely not going to happen, right? So whether institutions or not, crypto is going to go up. When I say up, I don't mean price. I mean the way the adoption comes in. Institutions would certainly be a catalyst, but definitely not the one that leads the industry.
I think a good way to kind of manifest that is obviously the growth of Bitcoin and cryptocurrencies, but also Libra as well. I mean, we're seeing right now that the instant moment where there's a challenge, there's this kind of push and pull of regulators to try to get some sense of control over it, to some degree, especially on something like Libra that's maybe a little bit more centralized at the moment. But when it comes to cryptocurrencies like Bitcoin, even some of the major regulators see these as separate currencies and non-securities in this case that can foster on their own, because the framework has been built from the get-go to not be able to censor these technologies. Any comments, guys?
I mean, institutional and retail business definitely coexist, and the institutional level of players come in definitely accelerating the whole process, right? So think about, for example, decentralized exchange, right? Like fully rely on the retail clients and definitely growing super slow. Right, and there's no stakeholder in there that will facilitate the whole development of the certain exchange. So I would say, without the institutional player, the market has been, evolving already for the past 10 years, become a 200 billion industry. But in order to push it further to an even bigger one, then we definitely need the institutional players to come in. And the whole process is like this, right? We will have the retail clients mass adoption, push the regulations to come in because it's getting bigger. And then we have a regulation infrastructure and also the technology infrastructure that institutional players will also come in and push it in a higher level. So I would say the relationship is going to be like this.
Yeah, I think there needs to be some kind of flight of capital out of, I mean, whether it's the institutions who really let it up or not, we do need some extra flight of capital because markets are inflows and outflows at the end of the day. You know, if there's not a drastic amount of inflows coming in like in 2017 on the retail side, you're not going to see this market accelerate to a multi-trillion-dollar asset class. And it is an interesting question of whether or not regulators will let that up easily or if they'll play a role in it, right, and adapt to these markets. So we went through our major questions. I wanted to go ahead and actually consult questions from you guys. So on the application, if you guys want to go ahead and leave some questions for those, we already got a few here. And to get a little bit more specific, I guess, about a topic we talked about, you know, I guess I did kind of ask a broad question, which was, where's the best region for crypto in the world? But in a broader sense, but more specific, where do you see in Asia the top country right now? We've got a few key regions. We've got Hong Kong. We've got Singapore, where we're at right now. There's South Korea as well.
Thailand.
Thailand as well, exactly. No, Thailand's actually another good spot that usually doesn't get talked about. Vietnam. There's a lot of different crypto startups across the world in these different regions of Asia. So I think in a more broad sense, what areas do you guys feel would be best here? And again, we got to give some credit. We're here in Singapore, right? You know, Singapore's been very good and positive to crypto, but where do you guys think is the best spot right now?
As far as for our clients, I mean, we focus a lot on, a lot of people have seen this year is the year for leverage or margin trading. You've seen a lot of crypto people, either they are new to the space. I would say they are not new to crypto, but they might be altcoin holders, but they are now switching to leverage trading or margin trading. China is definitely one of the biggest market. It actually sustained 2 or 3 very large exchanges that can compete on a global level in terms of volume. And we see good volume coming from Japan. I mean, Japan has always been a good area for FX trading and all that. And obviously, Vietnam has been, out of the surprise, increasing very fast, and Thailand as well. So as far as for margin traders, these are the countries we want to focus on as well in Asia. And yeah, so this is where we are, yeah.
Awesome. There's another question here that I got asked, and I think this would obviously be, of course, want to give everyone a little time to talk, because you guys have all been entrepreneurs in your own right. You guys have been working at a lot of great companies and kind of pushing the envelope for crypto. Someone had asked, since there are more competitors out there in the space right now, as you were talking about, there's been a lot of exchanges coming out there in the market. You guys all work in different respective industries of crypto in some different shape or form. What makes your company and where you work at one of the most competitive, I guess, kind of top players in your part of the industry? You want me to start, Justin?
Well, you know, Cumberland, by background, is part of a very large proprietary trading firm called DRW. DRW has been around for, I think, close to 30 years now and employs some 1,000 employees, including money managers and proprietary traders like myself. I think our competitive advantage is a strong understanding of how capital markets work and capital market history. So I never really feel like I'm caught off guard or confused or, you know, guessing where this space is going. I think I can apply a framework from historical markets to what is happening today in order to plot out a path, and then that helps me understand how to build our business, how to grow it. That's certainly a big part of it. I think Cumberland has an over-the-counter trading desk, and some of you who do business with us will know better than I would, but you know, I think we can be aggressive with our pricing, knowing that we can take the risk on our own balance sheet. We act as a principal trader, warehousing the positions as opposed to just auto-hedging the positions. We take views in the market as well. Most of our team come from aggressive trading backgrounds, some 10, 15 years at DRW, and we try to understand what is happening in the marketplace with our counterparty base, in the market, with the news, the developments, and we like to share that with the people who do business with us so that we can all kind of grow and learn together. So it's very different than, I think, just trading on a price. Now you're interacting. It's what we call high-touch service, where you're interacting with somebody and they can give you a little bit more, they can share some of their expertise. And I hope, you know, that we've helped some people along in their journey as well and how to understand a marketplace better.
Awesome.
First of all, thank you for the questions. I consider this advertisement time. So eToro provides a very unique solution, what we call the social trading function. So currently, we have one of the biggest community around the world. We have like 12 million users in our trading platform. And another very unique features that we offer, because we come from the traditional financial assets background, we are currently, one of the few trading platforms that offer real crypto and real stock at the same time. I think this is very unique. And since we come from a very regulated and traditional background, therefore, like the upcoming offering is also very regulated, very compliance-driven. That can fit in also a lot of institutional players, the API environment, regulations, etc. So I think to add up all those are like make our platform very unique and very user-friendly to our clients.
Yeah, I know the copy trader thing just came in the United
trading,
States as well. Yeah,
it's very unique.
Cool. So a lot of people ask me, what does Bybit bring new to the table? What we bring new is actually focused on the fundamentals of exchange. We realize there are a lot of exchange in this space. They focus on new ideas, trying to incorporate token economy into exchange. But when we look at exchange, I think the fundamental job is to execute orders. Right now in this space, we don't even have good exchange that can handle the volume with the current player. Now we're looking at maybe 3 years down the road, when real player come in, when real mass adoption comes in, who's going to be there to handle all this volume, and who's going to be not overloaded, and make sure that we have good customer support, good overall trading experience. So these are the things we focus on. And so far it has been proven we've been heading in the right direction with the speed that we're growing. Yeah. So. Yeah.
Do you have overloading so far in Bybit?
Not yet.
So whether retail or institutions, if this industry has to grow, then you have to make cryptocurrencies easy to use. And that's where we come from. So we at CoinSwitch, which is one of the few handful companies backed by Sequoia Capital, has built something called CruxPay, which is an open protocol for blockchain naming service and pool payments. So what we help users do is create a human-readable username, and you can link all of your crypto addresses to that particular username, and then every time you have to send or receive money from each other, you just have to use your usernames to do that. I know there are different players like ENS who are trying to solve that problem, but with us, again, one, we're truly decentralized, which means we as a company could shut down tomorrow and the system could still work. Right? That in all essence should be the decentralized part of it. The second thing is that we also do pool payments, because if you look at traditional payments industry has always been pool. Like you don't go to Amazon and say, hey, I'm going to pay you like $100, all of that. Right? You get a pre-populated message from Amazon and you just tap approve and then your bank deducts the money. We did that with cryptocurrencies, where you go to merchant side and you pay with your Crux ID, you get a notification on your wallet, and you just tap it and it gets approved. So any wallet that uses the SDK will be able to provide its user with a user ID, and this user ID is interoperable with any other wallet, whichever uses the Crux SDK implementation within it. So I think that's what we're trying to solve, like the basic block of getting more people, like the next 1 billion users into this industry.
Well, it's amazing to see so many different pivots for you guys and different focuses in the space. I think it shows how broad the crypto space is. And I mean, this has been a great conversation. It's great to see so many different perspectives. We're all from different corners of the world as well. So it's a fascinating conversation and a good time to be in crypto, I think. Well, thank you guys for joining us. I appreciate it. It was a lot of great conversation. And feel free to come up to any of us after the booth and talk to us. Get a little bit of perspective on crypto from us. So thank you all for joining. Appreciate it.
Thank you.
Thank you.